Welcome back, and we are in conversation with Chirag Mehta, who's Senior Fund Manager at Quantum AMC. Peter McGuire is CEO, Exim Australia, and PR Somasundaram is Regional CEO, India at World Gold Council. Gentlemen, thank you so much for staying back. It has been a very volatile gold prices and so many changes, especially when we look at gold as a financial asset class there. We have seen a lot of changes being made into India. But moving forward, because it's a global commodity and there's just so many factors right now that various asset classes are watching out for. So this one is to you. So whether it's about the dollar index or China coming back, China being the major buyer of gold as well, and then the market's also looking at weather concerns because a lot of rural India tends to buy gold too. Which factor would you think will impact gold the most in sense of prices and demand as well?
Prices, as you know, Manisha, is entirely driven by the US interest rates currently. If a big thing like the uncertainty over the war just disappears, then you may see some reaction, but it's very difficult to predict what that would be. But largely, it's going to be interest rates which is going to drive it. And as Chirag rightly said, there's only so much headroom for the growth. So I think with the next increase or whatever, you will see that gold price reacts positively. Now, coming back to India, what would be the biggest factor? Clearly, monsoons always hold a great significance for gold demand. But this year, as I mentioned, it is going to be more about the growth. As we see more growth, people are going to buy more gold. We have seen that not just from gold, you see the impact or the demand of all the luxury goods in India today. They're all growing at really crazy rates. So you will see whatever happens to the prices. Because of growth, you are going to see a very, very strong gold demand this year. And Chirag also made a good point about this is also a pre-election year. So people, you'll generally see that there will be a lot more interest in gold. So I would leave it at that, saying that this is going to be a very, very big year for gold demand. Again, 800 to 850 is what we expect, because whatever happens in India, we just continue to keep buying that much gold.
Well, yes, that point is well taken. So also when, you do a lot of data analysis. So when we look at the buying that we see in India with the consumption, that is investment vis-a-vis jewelry. I mean, we do understand that when it comes to India, the jewelry consumption is way higher than investment. And we are far away from getting those numbers within our portfolios here. But is there any trend change at all? Because there are now millennials, and we see the younger crowd as well talking about gold in the process of their portfolios.
Manisha, it's a good point. We see, in terms of trends, we see people moving to digital forms of gold, online buying of even gold jewelry. These are very strong trends. But if you look at the totality in absolute terms, they are still a very small fraction of it. And when it comes to bars and coins, India buys about 160 to 200 tons. It varies, but this is the range that which we have been buying. About 25 to 30% of our demand comes maximum from bars and coins. Otherwise, it is largely driven by jewelry. We haven't done any research to see what part of this jewelry is very plain jewelry, in that sense, which is purely, instead of having a coin, I will have a very small, simple chain. That I suspect is very, very large. So they are invested with an investment motive, not so much with a motive to wear. So that is also a very significant portion. So if you take that as part of investment, you'll see about 50% to 60% of Indian demand probably will be investment driven.
All right, so that's a number that we are looking at increase in as well. Chirag, how do you look at these numbers also? And as said, that it is going to be the US Fed meeting. Markets have tried to factor in as much as they could. Is the reason we've seen this huge range of 1810 to 1970 on the higher side in the first 2 months of this year already. What is it that can be an uncertainty, something that we haven't accounted for till now?
So I think I clearly agree with Som when he said that interest rates are the clear driver for gold prices currently, and it will remain so for next 3 to 6 months once we have a handle, because markets were anticipating earlier that there will be a peak rate, and post that, given the issues surrounding economic growth that may surface, it will compel the Fed to pivot. So I think our sense still remains the same, because we have seen a large increase in interest rates, about 450 basis points in US already. That will have its impact on the economy, on asset markets. And we've seen that, it kind of compels whenever the push comes, it compels the Fed to pivot and support growth at all costs. So I think we will be witnessing a same repeat of that cycle going forward. Whenever there is a impact on the economy, I think the Fed will pivot, and we shouldn't be very far from that scenario as well. So somewhere in the second half of the year, we will see that happening. Overall, that Fed pivots. I think markets are kind of giving discount to growth right now, saying that growth is still very, very buoyant, but we will see a lagged effect of the impact of interest rates. For example, the housing market is clearly showing signs of de-stress currently. So overall, there will be an impact from the housing market. And time and again, we have seen that with a lagged impact, the collapse in housing market does lead to an impact on the growth of the overall economy. Plus, signs of inverted yield curve, etc., are already showcasing that we may be staring at a recession. How deep that is, it's a matter of debate, but we will be seeing it a slowdown. And when there is a meaningful slowdown, and when everyone starts anticipating that, we will see a impact which is cascading in nature, and therefore compel the Fed to pivot. So that remains our base case, and we think that should be staring at that scenario. And when that comes into focus of markets, you will see pressure on risk markets, and gold should be doing well. That's the mindset we are working with.
Oh yes, most of the global banks and brokerages still believe that we could be making all-time highs in the dollar terms as well in this year. That could be in the second half of this year. That is when the US Fed interest rates will peak out, and the concerns that Chirag just spoke about, whether it's about from equities or real estate or the recession concerns, all of that could be supporting gold. So Peter, this one is to you. Where do you see gold as a best case scenario? What is the range that you're working with for the rest of this year now? And are you also in a camp that believes that we could be inching towards all-time highs?
Well, Manisha, I mean, we've got 10 months to go, and this is a very unusual year. First off, the dollar, when we hear news as far as good news, the dollar doesn't seem to move. When you hear bad news, the dollar absolutely crumbles, and that's been very evident over the last matter of months. So build that into your case or your best case. I really think that probably in the maybe sometime May third quarter, moving into fourth quarter, I won't be surprised to see gold 1950, 2000. And yes, I won't be surprised at all with the inflation story and trying to manage that with higher energy prices, that gold probably will take out an all-time high this year. It's going to be wild. It's going to be exciting. And that's what traders want. They want movement. And 2% last week, Manisha, builds on that.
All right. So the demand is going to be on the stronger side. People are buying gold, and with the kind of narrative that we are getting into in this year, the rest of the year as well, does not sound so great. So gold in your portfolio perhaps could give you that edge that we keep talking about at all times. Thank you, gentlemen, so much for joining us today and talking about all things gold. But with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.